without further ado, uh, I'm Michael Williams. I'm the financial services manager over here at LevelSet. And this is, I believe, the second time we've had Hannah on a webinar pretty recently. She does an incredible job. And with the new stimulus package, we wanted to have another webinar for you guys. So we're going to jump into the PPP loan update with the Economic Aid Act. It should be super valuable for everyone involved. And so over to you, Hannah. Thanks so much for jumping on again and helping us out.
Yeah, thanks so much for having me. Yes, it's been a busy time with the Economic Aid Act. So we'll just hop right in because we've got a lot to talk about, and I'm sure that there will be a lot of questions. So I want to make sure that we leave some time for some Q&A at the end. Do you want to go ahead and talk about LevelSet real quick, and then we can go from there?
Yeah, sure. Yeah, thanks. For any of you who are unfamiliar, who is LevelSet? Quite simply, we help suppliers and subcontractors get paid faster through lien rights management, data and insights, and then payments and financing. We're here to help you get paid faster and more easily. So make sure if you're interested in getting paid faster and easier, then check out LevelSet.
Always a good thing. All right. And I'm Hannah Smolinski. I'm a CPA and the owner of Clara CFO Group. And I have been with, I did a previous webinar for LevelSet a couple weeks ago, I guess maybe a month ago at this point in time. But I'm here to help explain this for you guys. I've been helping small business owners for the past 8-9 months try to understand and dissect PPP. I have a YouTube channel that I've been working on all of this stuff with and trying to explain it as best as I can. And then I'm also a senior advisor to Upside Financial for their PPP loan forgiveness product. So they're actually sponsoring today's webinar. So let's go ahead and just dive right in and talk about really everything about the Economic Aid Act. So we actually just got the name of this, by the way, the Economic Aid Act. It has been kind of known as the $900 billion stimulus bill, which was passed December 27th, along with the full government funding package. So you might have heard about that. It's a couple $1 trillion. And then specifically carved out in that is this economic aid piece. So even carved out within that 900 billion, there's additional funding now for PPP. So we're going to kind of talk about really everything related to PPP. And I just kind of want to give like a big caveat at the beginning. This bill was 5,593 pages, and we got it on December 21st. And then guidance has now been coming out explaining these things in further detail because the actual legislation is very legalese. And then we get SBA Treasury guidance that's a little bit easier to understand. Last night, another 124 pages of guidance was posted. So I have already done a preliminary review of that, but I do want to give a caveat to say like there's still lots of information that's going to be dissected. And what we're going to focus on in this webinar is what we know and what you need to know now for your PPP loans, either existing PPP loans or if you're eligible for a second round. We can definitely talk about all of that. And then I just want to say, like, if there's questions specifically about EIDL and employee retention credits, those are going to kind of be out of scope for the purposes of this webinar today. We're going to mostly just be focusing on PPP because those other things are still kind of TBD, if you will. So economic aid. So the purpose of this additional funding is really all to be, is just to continue helping small businesses. Just like PPP1, it was really focused on trying to help small businesses maintain status quo. Any businesses that were in business before COVID hit, we wanted to keep those businesses running and operational and employees paid. So the purpose with PPP second round, what we're seeing is that they're trying to target more harder hit businesses. That's actually kind of part of the purpose of this. They've specifically called out certain types of businesses that are harder hit. And now it's open to potential first-time borrowers that didn't get money the first time around, but then also now people who did get a first loan are potentially eligible for a second round of PPP. So we're going to talk about that. The maximum amount that anybody can get is $2 million. Originally it was 10 million. So now they're again targeting the smaller companies and potentially some of the more harder hit businesses as well. And they've set out like special allotments for even smaller companies. For example, companies with under 10 employees, they have like a specific amount of money earmarked for those businesses, which is all within the 284 billion. So what I really want to start with is for anybody who has an existing PPP loan, what has changed? Because with the Economic Aid Act, it updated some things that is really critical. And we even talked about this in the last webinar that we did. The big thing that I want everybody to know, write it down, have your ears perk up right now, is that taxability on PPP is non-existent. There is no tax effect of the PPP loan. What we had known the last time we did a webinar is that you weren't allowed to deduct the expenses that were going to be forgiven for PPP. But the Act has clarified that both PPP is not taxable income and you can deduct those expenses for the purposes of your taxes. So this means that you get money from the government with zero tax effect. That is really, really huge. People are right now planning to make their Q4 estimated tax payments, and that is super critical. So I just want to make sure that everybody understands that. And that also applies to the EIDL grant. So if you got an EIDL grant, then also not taxable, and you can deduct the expenses when you use that money for whatever you use the money for. Okay. So huge, 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 huge. Okay. I just want to make sure that is really, really clear. I also wanted to mention that they've also offered a potential simplified forgiveness for loans under 150K. I imagine it's going to be very similar to what the 3508S form was looking like for loans under 50,000. Now they're going to raise that up to loans under 150,000. Forgiveness is going to be simplified in a one-page form. This does not mean blanket forgiveness, which a lot of people were hoping for. I think it probably just came down to too much potential fraud. So they are offering simplified forgiveness for loans under 150, but not blanket forgiveness. Okay. And then they've done a couple of things for existing loans that they've essentially just made retroactive into the original CARES Act. They've added some additional payroll costs. And so these are going to be pretty important for a lot of contractor businesses, I would believe, or business like construction businesses, because they have added in the ability to include disability insurance and life insurance. So from what I believe, this is my interpretation, and we are waiting for kind of really clear guidance here, but disability would probably include workers' comp insurance. So that's a big expense, I know, for lots of contractors. So I want to just kind of bring that up. We're waiting for I want to see it in writing that is okay for workers' compensation, but that is likely a additional payroll cost you can now include. Okay. And then non-payroll costs, I actually have a slide on this because we have lots of additional non-payroll costs that I want to talk about. And really with non-payroll costs, they've added these. And again, these are added retroactively. So if you got a PPP1 loan, you got it in the first round, you can now include these costs. Let's say you applied for a loan and you got too much money. Let's just say you had included some 1099s or something and you got a loan that was too big. And when you were doing your forgiveness documentation, you still had a leftover remainder amount that you weren't able to use on any non-payroll or payroll costs. Now we have these additional costs that you can potentially try to see. I mean, almost everybody's going to have something like this. Okay. So I want to bring this up to you guys. So they've added 4 additional categories. And excuse me, I'm actually just going to read it straight from, I'm not going to read everything because it gets a little overbearing, but I've got the guidance in front of me. So they have added covered operations expenditures. And this is really talking about any software or any business software or cloud computing service that facilitates business operations. So this could be an inventory management system, an accounting software, a payroll processing software, HR, really any software that helps your business function is included now as a non-payroll cost. So that has been, that's a really big one that basically every business operating in this day and age has some of these costs, okay? So these can be included. We also have covered property damage costs. I think fewer people are gonna probably be able to count these, but this would be if you were a part of a public disturbance of all of the looting and things that happened in 2020. If you had a damage like that was not covered by insurance, you can include it here. I think that was kind of a, I don't know, a little bit of a gift, I suppose they were trying to do there. And then this is a big one, I think, for construction businesses is covered supplier costs. So I have vendor costs on the slide here, but it's technically covered supplier costs. And this is any expenditure made by the borrower to supply goods that were needed during the covered period. So who's building stuff? Who had a job that you needed to go and buy supplies for? Basically, mostly every type of business is going to have some of these. So really inventory purchases that were needed during the covered period can be included, or any product costs that you might have, or anything that you've had an existing contract to purchase or a purchase order can be included here. Okay, so this is a big potential bucket of money that lots of people will be able to use this for. And then the last one would be workers' protection expenses. So this is if you are buying masks for your employees, you're buying extra hand sanitizer, you are maybe building out a certain section of your business to help protect workers, or maybe installing. I mean, this is not a restaurant or anything, but if you had to install a drive-through service or something like that, that would be included here. But bigger thing for you guys is probably more like, what are those things you're doing to help protect your workers? Are you buying, more temperature gauges as people go out, you're taking their temperature, or hand washing stations or things like that, all of that to help prevent the spread of COVID-19 and to protect your workers. Those expenses can now be included here. Okay, so that's probably going to be a big one. That's going to be pretty helpful for people who already have loans that need to kind of round out their total expenses. And then as you're going into 2021, you can also think about those expenses. You have payroll costs, and then you have non-payroll costs. So these are potential things you can spend your money on. All right, so let's go ahead and talk a little bit about second draws on their PPP loans. So we talked about existing loans, that's all good. Let's talk a little bit about what it looks like to get a second round of money. So the first thing we need to determine is, are you eligible? And I'm going to take, are you eligible here? So these eligibility requirements are specifically for anyone who's getting a second round of money. If you are getting your initial PPP loan, you will actually go back to the original eligibility with the first round of PPP, and you are not subject to these eligibility standards that we're talking about right here. This is specifically for if you want a second round of PPP. Okay, so you have to have under 300 employees. And then you have to prove that you've lost revenue in any one quarter comparing 2019 to 2020. Okay, so 2020, let's say in Q2 of 2020, your revenue was $100,000, but Q2 of 2019, your revenue was $150,000. Okay, so you would actually have a 33% decline from 2019 to 2020, and that would trigger you to be eligible for PPP2. And it only has to be one quarter, and it doesn't have to have, you don't have to prove out a total year loss or anything like that. You could be up every single other quarter and just show a decline in one quarter, and that's okay. All right. So I want to make sure that that's really clear for people. I did a video on this and I have a spreadsheet specifically for this. So if anybody's looking for a kind of a step-by-step walkthrough on how to do that, we can make that available afterwards on YouTube or something like that. So eligibility under 300, showing a revenue decline. And then you also need to, well, it's a little bit of a no-brainer. You have to have been in business before COVID started to be able to be eligible. So if you started in June of this year, you are not eligible for a PPP loan. You can pursue other potential funding, but you can't get a PPP loan. You had to have been in business before February 15th of 2020. And then you have to, if you did get a PPP-1 loan, you have to have spent or plan to spend your PPP-1 loan before you apply for a second. You do not have to have gotten forgiveness, and you do not have to have applied for forgiveness before applying for a second loan. Those are big questions that I'm hearing over and over again because it was talked about at some point in time, but you don't have to apply for forgiveness just yet, okay? But you have to have spent the money. All right, so how are we calculating our new loan amount? It's very similar to how we did it for PPP-1. You take average payroll costs, and then they're giving you the option of 2 time periods. You can either use 2019, which if you got a PPP-1 loan, you used probably 2019, or you can use the 12 months preceding the date of your application. So if you apply in January, then you're going to use all of 2020. And they're actually recommending anybody to just use all of 2020. Even if you apply in February, they're saying, hey, it's really easy to pull annual reports from a payroll provider for a full calendar year. So just use 2020. That actually just came out in the guidance last night that if anybody wants to use 2020, they can. If you want to use the 12 months preceding, let's say you apply in March and you want to use February to February, that's fine too, okay? But you have the option, so you can choose which one is better for you. So I actually recommend people doing the calculations for both, so you can see which one is higher and then take that number if you want a higher loan. So you take your average payroll costs, get the annual cost divided by 12, and then that would get your monthly costs, and then you multiply that times 2.5. So you essentially get 2.5 months of whatever your average payroll costs, and that will be the amount of your PPP loan. All right. The total maximum for any person is 2 million. I think we mentioned that earlier, but I have a little note down there for it. Documentation required for application. They put out the guidance on this today. I'm just going to briefly cover it. It's really similar to whatever you had to do for PPP-1. If for sole proprietors, they're going to want to see a Schedule C. And you might say, well, let's say my Schedule C in 2020 is actually higher than, or what my profit was higher in 2020 versus 2019 overall, even though I still met the revenue decline number. I haven't filed my taxes yet, Hannah. What do I do? You can do a proposed Schedule C. So even if you haven't filed your taxes, you can still submit that. That's what we were able to do for PPP-1 round as well. So, but if you are a sole proprietor, you're going to have to provide your Schedule C for whatever year you use. Payroll reports to prove out your employee costs. Your quarterly payroll taxes, your 941s and your state quarterly payroll taxes will be needed. And then if you're including payroll costs like retirement contributions and insurance, you're going to need to include proof of those expenses as well. So those are looking like statements from your retirement plan, or same statements from your insurance company, or canceled checks or bank statements, whatever you have to prove out that you've actually paid those amounts. And then proof of revenue reduction for loans over 150,000. So this is kind of that revenue decline we talked about. They're saying any business that is getting a loan under 150,000 at the time of application does not necessarily need to prove out that they have that revenue loss. However, they're saying that you will have to provide it at some point in time, but not necessarily right when you're applying for your loan. I think they know that a lot of small business owners, don't necessarily have an accounting software that they can go and pull a quick report right out of QuickBooks, super quick and easy to prove out this revenue reduction. So they know it's going to take a little bit of time to pull that information together in order to prove this out. I agree with that. I also say, like, you're going to have to do some kind of at least initial investigation to know whether or not you're meeting this 25% reduction. So you're going to kind of have some numbers to be able to, like, honestly certify that you have had a 25% reduction. So that's just something to think about. Again, there's, like, to prove out the loss of revenue reduction, you're going to have to either provide an accounting report from an accounting software, or prove out with bank statements, or, you know, checks received, or something, some kind of documentation showing that you've received money in. Okay. Let's see. Okay. So just as you're thinking about applying for another PPP loan, the first thing I want you to do is check with your bank that you got the first round of PPP with, and see if they are accepting applications, or if they will be accepting applications for PPP2. Most of the banks that participated the first time around are going to participate the second time, but some are not. So you want to make sure that you have a bank lined up before you assume that they're going to take applications, and then you get left, potentially not having a bank to help you out. So if your bank is not, you could go and look for potential other local banks, or you could do online lenders. There's lots of people who are still helping with this process. And if you were really unhappy with your bank the first time around, it might be time to go and try to find a different lender to help you out this time. Second is to know if you qualify for that revenue decline. Do that calculation, make sure that you are able to apply for this money, and then go ahead and calculate your loan amounts. So like we said, pull the information, compare 2019 to 2020, see which amount gives you a higher payroll cost, and determine what you want to ask for. So whatever your loan amount is, you don't have to take your maximum loan amount. So if you're planning to lay a bunch of people off, or you're planning to close your business, or you have some kind of, that you're not going to be able to spend the money, you don't have to take your maximum amount. You can take less than your max. Okay. You can't take more than your max, but you can take less. All right. And then have a plan to spend the money. So this is kind of one of the big things I was pushing when PPP came out is, make sure you are being strategic about planning your money and how you're going to use it, forecast out what you're going to be spending on payroll, and then think through that so that you don't get left holding the bag at the end of the day. Okay. That we want this money because it's essentially free if it gets forgiven. So let's kind of use it strategically and use it wisely. Using the money, we'll go into that. So we're using this money similar to what we did with PPP1. It's still, you need to use at least 60% of the money on payroll costs. And then the rest remaining can be spent on non-payroll costs. So up to 40% can be non-payroll. And then at least 60% needs to be spent on payroll. With these new added non-payroll costs, please don't get this loan and use it all on supplier goods and then expect it to be forgiven. You have to have payroll costs in order to use the money for non-payroll costs. Okay. So that rule has not changed. All right. Still, we have to use the money the same way. Now that we have these additional costs, so we have the additional insurance added to payroll costs and these additional non-payroll costs, you can, plan out your spending that way. And then the interesting thing about this is they've also given us a selection now of a covered period, and you can select anywhere in between 8 weeks and 24 weeks for the covered period. So this might be helpful to you if you are planning for letting someone go. You might say, hey, well, I know, I have somebody that needs to leave, but I'm going to be strategic about when that person goes, because you want to make sure that it's after your covered period if you're trying to keep FTE count up. Okay. So you can do that. And then once the end of your covered period, then you can go ahead and apply for forgiveness. Okay. With the FTE counts, I haven't gotten any guidance yet on FTE counts and exactly how things are going to be counted. My assumption right now is that it will all be similar to how things were handled the first round of PPP. You want to keep your headcount up between like the time of the application and the end of your covered period. So just keep that in mind. If you're planning for a major headcount reduction, you're going to need to be strategic about that. All right. Kind of more information to come on FTE stuff. Let's see, documenting for forgiveness. So we talked about documenting to apply for the loan, and this is documenting now for forgiveness. It's going to be really similar to PPP1. A lot of the information that you're going to need to provide, payroll reports, tax returns, things like that will be very similar. They have opened up this forgiveness application that helps you provide less documentation for loans under 150. We're waiting for that forgiveness documentation or forgiveness form and application to be available. It has not been yet published by the SBA. They have, I think, another like 2 weeks or something to publish it. So they're going to take a little bit of time to get that out to us. So just stay tuned if your loan is under 150. Woo! So that was okay. So I think we're at Q&A time at this point. So yeah, what questions do you guys have?
Yeah, thanks, Hannah. If anyone hasn't typed in their questions as we went along, I'm going to get to those that did now, but feel free to ask away. Let's just jump right into it. If someone's business was started in November of 2019, it's not a full quarter. What is the actual definition around a full quarter? Can it be partial quarter of 2019 to use a comparison?
Yeah, if it's partial, I think what we do is we prorate it. You prorate it essentially to the same time period. I'd have to look up. They have specific calculations for all these different scenarios. But essentially you could kind of prorate if you started like November 1 of 2019, you would take like that is 2 months and then kind of, I guess you would probably make that into like a full quarter. Like what would that full quarter revenue be? And then compare it. That one, I'd want to like see exactly what the calculation would be for that. So we can update people afterwards on that too.
In regards to PPP2, if you did not take out a PPP loan for PPP1, does the new stimulus package, if this is your first loan are you taking, are you doing it using, what set of rules are you using to take out your first PPP loan today?
Yeah, your first PPP loan will be the original rules. So you'll still use your payroll costs to apply, and you'll take the 2.5 months of average payroll costs, but you do not have to certify to that revenue decline. So that's the good thing. Like if you didn't have a revenue decline, you can still get a first round PPP loan. So the additional allowances of the non-tax effects and then the additional expenditures that can count as the 40% that is forgiven, is that grandfathered in to the original PPP if you took out your first one today? Yeah. They've basically said they want to take those additional costs that they've added. They basically are saying like as if they were written into the original CARES Act. So then any loan given after the original CARES Act, which is all of them, would now have those additional payroll allowable costs.
I just saw a quick question pop up that you can answer pretty quickly. How do you find yourself on YouTube if someone wants to learn more?
Yeah, so my channel is Clara CFO Group. So if you go to @ClaraCFO Group, you can find me there. And then my last video that was posted was that eligibility one, which has been kind of the big question. There's also like a download available to kind of do that revenue calculation to prove out the decline.
Is the 2 million?
I also see a quick question. Somebody posted in the chat, and I just want to answer that real quick. What is FTE? What is FTE? And FTE means full-time equivalent. So your employees, if you have two part-time employees that are both working 20 hours on the regular, that's one full-time equivalent of like, a normal 40-hour work week.
Yeah, thanks for that. Is the PPP2, so the $2 million maximum for PPP2, if one were to have a $1.9 million PPP1 loan, is the $2 million in aggregate or separate to the second PPP?
It'll be completely separate. So it's not like the combined total needs to be under 2 million. It's just each one individually. Like the second round can't be more than 2 million. So I helped a client with forgiveness on a $4 million loan, and they need a second one. Although they probably qualify for $3 or $4 million, they will only be able to get a max of up to 2 million.
Cool. I'm going to try and combine a few questions into one. In regards to looking at someone's financial health for the second round of PPP, if there's a revenue decline, but someone has significant savings, like a significant nest egg, or is that taken into account in assessing the company's financial health or financial decline? And then secondly, is the revenue gross revenue or a net revenue scenario where not all revenue is kept at the end of the day?
Yeah, it says gross receipts. I'll answer the second question first. So
Sure.
gross receipts would be, before any expenses are taken out. I would go with gross receipts. I know you guys probably, like contractors probably are in a situation where they bring in money, but then, a large portion of it is to buy supplies or things like that. And if that was the case, you would still go with gross receipts before any expenses are taken out.
Okay. Yeah, there's certain situations where joint check agreements are where money is coming in, but it's already pledged somewhere else. So I think it's good to have that distinction of gross receipts.
Yeah, and it's important to remember too, the PPP loan does not get included in gross receipts. The EIDL grant does not get included in gross receipts because both of those are not considered income. And then any other kind of funding or, be clear if you're taking a deposit for somebody that is not, like if it's deposit and it's technically more of a liability on your books and not a income piece, that's something to think about. Just make sure your accounting is kind of up to snuff on that piece. That should help. And then was there another piece of that question?
No, we have quite a few. So
I know.
Everyone.
There's gonna be a lot of questions. So
yeah, we have 23 minutes until the cutoff. So everyone just kind of be patient. I'm trying to get the most answered to see if I can aggregate a few of these or find some quick ones. I may have missed this, but is the revenue decline 25% or just a decline for any quarter?
It has to be at least a 25% decline in any one quarter. So if you have 10% decline in every quarter, that wouldn't count. We need to show like one quarter of 25% or more.
Are work in progress journal entries allowed in revenue calculations, reduced revenue calculations?
I would have to see that. I don't know. I don't do enough construction accounting to be able to answer that question. But work in progress is typically on the balance sheet. So yeah.
And someone asked if you would be sending out, you referenced a spreadsheet earlier, and if that could be made accessible or if you could send that out to the attendees.
Yeah.
I'm not sure which one.
Yeah, I can make a link to it. So it's just available on my website. It's the one that I go through on the video, the YouTube video that I mentioned on eligibility, but we can definitely make that available.
Okay. Can you review the vendor costs again for PPP1
Sure.
and PPP2?
Yeah. So this is for everybody. And I'm just going to read it because I think that it's kind of, the way that they word it can sometimes be a little interesting. Okay. So this is covered supplier costs. That's what you're talking about, right? Okay. Expenditures made by a borrower to a supplier of goods for the supply of goods that are essential to the operations of the borrower at the time in which the expenditure is made, and then is made pursuant to a contract, order, or a purchase order. In effect, at the time before the covered period with respect to the applicable covered loan. This is where it gets like, with respect to perishable goods in effect before at any time during the covered period with respect to the applicable loan. So what I interpret that to mean is that these are that you are paying the supplier of goods to supply goods to you. So you are buying goods that are essential for the operations. I think that's like the key part of this is, are they essential to the operations of your business? Or maybe they weren't essential, but you were in contract to purchase something. So you had an obligation to purchase. Okay. So those are kind of the two things. Were they essential? So basically, like if you had to use them for a project during the covered period, then that would make it essential to the operations of your business, right? Like if you get this money in February and you have a project in March that you have to buy goods for, that would be essential to the operation of your business, right? Or if you maybe made a purchase request previous, but you're kind of locked into it, you have to buy it one way or the other, you can't back out, then this would also be okay. Even if it's not essential to be used during the covered period, but you have committed to it, that would also be included.
Thanks. Just to clarify again, someone is still a little confused. If you received PPP1 and you do not have a revenue decline, then you are ineligible from PPP round 2, correct?
Yeah.
But if you did not receive PPP1, regardless of your revenue decline, you can get a PPP loan now with the new stimulus package.
Yes. Yeah.
Okay.
So if you had never gotten one before and you need one now, you can go ahead and apply and you don't have to prove a loss of revenue. Yes.
This is an interesting question. The person asking didn't apply in the last round, but they ended up having a settlement from a car accident, which they used that funds to keep the company afloat. Will that count against me if I were to apply for a PPP loan now?
So that sounds like a personal, like that sounds like a personal car accident that they used that money and
used to fund the business.
Yeah, as an equity infusion, which even
Yep.
if you had gotten a first loan, that would still not be considered revenue. That's an equity infusion from the owner to the business. So that's on the balance sheet and it wouldn't affect your revenue. The key point of that though is more that the person didn't get the loan to begin with. So they can totally apply.
Great.
Yeah.
Since these loans are not taxable and have no tax effect, how should they be accounted for on financial statements?
I've been like thinking through this, and then it's kind of, I'm still working through this. The only thing I can logically say is that it gets closed out to equity, because these were loans sitting on the balance sheet. It's never going to touch the P&L. Because what was going to happen is we were going to back out the loan from the expense side. But now when we're doing journal entries, we basically have to close it out to equity. There's really nothing else we can do. So when you get forgiven, this loan is going to sit on your balance sheet until you're forgiven. And then when you're forgiven, for whatever you are forgiven, if it's 100% or if it's, some amount less than that, the amount that's forgiven would have to be closed out to equity.
Yeah, that makes a lot of sense. Mm-hmm. Can a sole proprietor qualify for PPP round 2 similar to round 1?
Yes. Yeah. Same
Are
thing,
there-
applying using Schedule C income, same thing, same way.
let's see. While I'm going through the other questions, if everyone looks at the chat, we did upload the link to not only Hannah's worksheet, but also her eligibility YouTube video. So you can find both of those things in the chat box now.
Thank you, Genevieve.
When can people start applying for the second round of PPP?
Yeah, so I think what the banks are waiting for is they're waiting for the actual application from the SBA to be ready. And after the enactment of the bill, I believe they had, I forget exactly how many days. They didn't give them a lot of days. It was like 12 or 14 business days or something to be able to put the application to be ready to take applicants. But all of that, just getting to what you want to know, banks will probably be opening up applications within the next week or two. This is why we're having this conversation now before we know all the details of every single thing, because these loans are still first come, first serve. So I do think that we have plenty. Just to kind of give you guys a little bit of anecdotal information, I had a lot of clients apply for PPP loans. And then when I went through and assessed who was eligible for the next round, about 40% of my clients that got PPP ones are eligible for PPP 2. So I'm kind of thinking that is automatically making me think, let's say about half of the people who got it the first time around are now eligible for the second round. And we do have some people coming out of the woodwork that are now that didn't know about it the first time or couldn't get a first round loan, and now they're going to come in. But we've got a couple of things to our benefit. The fact that you're not having these large publicly traded companies trying to come in and get $10 million of loans, and we're limiting loan amounts to $2 million. I think there's going to be a lot of money, and I think a lot of small businesses are going to get this money if they need it. But I still don't want people to sit on this and wait for too long. It doesn't necessarily mean that if you don't get it in the first day, you're not going to get it. But I think, that gives us a little bit more time. That's what I kind of am really getting out of all of this.
And just to confirm, the 100%, the $100,000 annual compensation calculation, is that still in effect when calculating payroll expenses?
Yeah. So any individual can only get up to $100,000 of cash compensation. So that's really important when you go to think about, maybe you have an employee who got a total cash compensation of $110,000, but then they also got retirement benefits and they also got healthcare. Those retirements and healthcare, those don't go into the $100,000 max. Those get added on. So you will have to take out those excess wages of the $10,000. You can't include that from the cash compensation piece, but you can still include the fact that they got a retirement match and they got some healthcare that was paid for by the company. So that's kind of huge, because a lot of people were doing that the first time around. They included all of that and just said, oh, any one employee could only get up to $100,000 total. And that was just, we were all trying to do our best at that point in time. There wasn't enough information to clarify that when people were applying for these first come, first serve loans.
If someone had two entities that they merged on January 1st of 2020, can they use both of those entities' activities in 2019 to calculate the revenue decline comparison?
Yes, I think the interim rule that just came out has more guidance on that specifically for combinations. But I do think you would include both to get, because what you want is an apples to apples comparison of the 2020 year to 2019 year.
Yeah. I think it's a good question. It's a good question for you to re-clarify these loan proceeds not being counted as revenue. But the question is, my revenue declined in Q2 of 2020 by 25%, but the bank statements that they use show a funds increase due to receiving PPP and EIDL money. Can I deduct that?
Yeah, you would just back that out. If you're using bank statements are a poor representation of your actual revenue, because they would include any type of cash infusion. They would include that settlement or an equity, if the owner lets the business borrow some money, or, you did get these funding from other places, that would be, or if you had to borrow from a line of credit, it's not going to be the best source of information. Some people don't have an accounting software. I will still plug an accounting software for any small business all day. Please get one if this is what we need to do. This is a good reason for that. But if you are going to use your bank statements, you would probably just mark this is revenue, this is revenue, this is revenue, this is equity or loan money. This is revenue, and just you probably will have to have a spreadsheet to kind of support that number with working through your bank statement, identifying what income is actually income, what incoming funds are truly income, revenue versus loan.
Yeah. This is another question around kind of the gross or net revenue question, but specifically for construction, is revenue sales or cash receipts?
They say gross receipts, which is clarified in the interim rule, which is referencing another document. What I believe it to be is whatever you, it's essentially, I think the question is this cash or accrual basis? Are we talking about cash or accrual basis? I need to do the diving deep to make sure that I'm clear before I tell you guys. But my assumption right now is that it would be whatever you're reporting on for tax purposes is probably what you would use. So if you're a cash basis tax filer, you would probably use cash basis if you're accrual. Now, like I said, there was a reference to that exact question in the interim rule, and I haven't been able to find the source document just yet. So we'll get a firm answer shortly.
Yeah, there's a lot of questions around that, just asked in different ways. So if Hannah, if you can find that, and we can send, even if you send it to me, I can send it out to all of the attendees to make sure we have that answered.
Yeah,
I just want to commit to the audience.
Yeah, absolutely. I think it's a very important question. We need to know it ASAP for sure.
Okay, great. So if this is still unanswered for anyone attending, we'll make sure and get clarification on that relatively soon and send it out to everyone.
Yeah, I don't know if, and then we're also kind of diving into this on our side. So Upside Financial is also digging into all the new guidance as well. So they've got, a team of accountants working on this. So I'm sure that we'll get the right answer out very quickly. This is that hard part of trying to get as much information out, because this is very time sensitive, but also trying to get the right information out. A lot of people, I've been seeing this right now. There's a lot of people trying to be the first people to get information out, and then sometimes it's incorrect. We were on a webinar yesterday where there was a pretty egregious incorrect information being spread. So, we do want to try to be really careful and being really clear on really what we know and what we don't know, so that we're not leading you guys down a path that's, going to be hurtful down the road.
Yeah. I have another question around the timeline for its second round of PPP or PPP2. So this attendee started their business in 2020, and they were eligible and did receive their PPP the first time around. Are they eligible again for any PPP loan now?
Yeah. So if you started in 2020, you're going to compare your Q1 revenue you're going to take that as kind of your 2019 revenue, sort of like you're going to do that calculation. I go over that in the video as well, but you would take Q2, Q3, Q4 and see if you have a decline to Q1. So that's how you would kind of do that comparison to prove a revenue decline. So you still would have to prove a revenue decline if you did get a PPP-1 loan. You're just going to do the calculation slightly differently in that case.
Could operational costs include contracted 1099 subcontractor service, not supplies, but subcontracted labor?
This is a big question. Yeah. I don't want to answer that one. Covered supplier costs. It really talks about goods. It says the borrower to a supplier of goods for the supply of goods. Because, and fundamentally, sole proprietor, so that independent contractor that's providing the service to the business can go out and apply for their own PPP loan. So this has been one of our questions that we're trying to like clarify. Some people are interpreting it to mean that you can pay 1099s, which I personally don't feel like is the right interpretation. So I don't want to tell anybody that that's the case until I see it in writing from the SBA. I don't think a covered supplier cost would cover it. And then operations expenditures also is really talking about software. It's not talking about like anything for your business to let it operate, because all of us would probably have contractor expenses in that situation, but those individual contractors can go out and get their own PPP loan.
We're in one of those situations where we're answering them slower than they come in. So we're trying to get to them as many as I can. Cash and bank didn't get answered. Just to clarify, assets or equity.
There's still going to be a certification that we don't know exactly what the wording of it is going to be, but I imagine it's going to be really similar to the first round of PPP. There's a certification that says taking this loan is necessary for the continuing operations of this business. So that's where it gets into a little bit of a self-certification, you have to determine whether or not you can honestly certify to that as the business owner. We know some people who didn't really need the money. For example, like a sports team that had, a billionaire owner and yet took out a $4 million loan. Is that a necessity if the $1 billion owner is there? So that's kind of where you have to kind of make a determination for yourself and your ethics and your business morals, really. And are you going to be okay if you get audited and somebody says, well, you had $200,000 in the bank and you asked for a $10,000 PPP loan. Did you really need it? That's kind of where the question comes down.
Yeah. So I guess what you're saying is there's a little bit of gray area, and is it required to show your bank statement in advance to prove that? No, but it could be audited. Am I correct?
Yeah, you could be audited. One thing that I think is interesting is if you do cash flow forecasting for your business, you could have hundreds of $1,000s in the bank and have no current contracts to help you know that you're going to be able to continue on in your business. Or you could have access to a line of credit or something like that. But if you don't have any contracts in place to, make sure that your business can still survive, it might make sense for you to still have a PPP loan and have cash in the bank, because you know that maybe your runway of cash is only 2 or 3 months. But with PPP, you know that you could get to 6 months, which then you would be able to get contracts at that point in time. So I think there's a little bit of, even if you have cash in the bank, what does the business need? And kind of creating a narrative around that can be helpful, and creating some support for that. So if you do get audited, you can be like, hey, this is my logic at the time. And having that documentation will always be helpful to you.
Yeah, just this is help some additional people in the audience saying our construction company uses work in progress to show the difference in accrual and cash basis for accounting. I think that's why someone asked if you can use this report.
Okay. Yeah. Yeah, I'm not familiar with that enough to like speak to it, unfortunately.
Yeah. And here's another one. Please clarify if you need to show cash in bank, including savings, moving to zero or a low balance. And so I think you just answered that. That kind of comes into, and it depends if you feel comfortable when an audit came up.
Yeah, I mean, you're not going to have to like prove how much you have in the bank. Now, if you had an over $2 million loan before, then there's a cash requirement that you actually have to fill out a form and say how much you had in the bank at a certain period of time. But we're not going to have any second round loans that are over $2 million. So they're not really questioning the liquidity as much. You just need to make that certification.
Sure. Someone else asked if they would receive an email with the actual application form when it's ready to go. Do you have a specific resource for you guys of the easiest way? I know you had mentioned it's good to go through your existing bank, but if someone wanted to go through you, or do you have a resource or best practice for someone to know when the application is ready to complete?
I mean, I'm recommending everybody to be proactive with their bank. Reach out now, make sure that they're going to be accepting it, and try to understand what their process is. Some banks are already communicating about what they're doing, and then some banks are not. I would recommend not having anybody just sit around and wait for somebody to tell them what to do. This is going to have to be something that you need to be proactive about. And this is kind of, it's on the borrower to get the number right, to get your payroll cost number correct. It's not actually the bank's responsibility. And then it's on you to apply for the loan. I go to the Treasury website, and under the Treasury website, there's a specific section for small business assistance, and we can probably find that link and get it out to everybody. But that they're updating as soon as an application is available, it will be updated on that site. And it will be the SBA's form that then the banks take and they kind of turn it into their own online portal. So they're essentially going to be asking for all the same information. So it's nice to have the SBA form, because then you know exactly what you need when you go to apply for the loan with your bank. So hopefully that's helpful. I like the forgiveness or the loan application process has to go through the banks. You can't apply directly through the SBA. So you can't just fill it out and then like send it off somewhere.
Yeah. Do we have any info on what the PPP2 look back periods will be for FTE levels?
No, I don't. Yeah, that's a big question in my mind.
Yeah.
I think it's I don't know what they're going to do for that just yet. My recommendation to people right now would be don't let anybody go.
Yeah.
It's just until we have better guidance. But if you're going to take a loan, like be clear, like, okay, I need to keep these people on my payroll.
Yeah.
So
If a PPP1 loan has not yet been forgiven, are there any special exceptions that one needs to make when going into a second round?
No, I mean, you just need to make sure that you have either spent all the money or that you have a plan to spend it before you apply for a second round. But apart from that, no. I mean, you've got those additional costs now. So if it wasn't fully forgiven before, now you can add those in. But yeah, you don't have to apply for forgiveness or anything like that.
Well, I think we're running out of time. I'm trying to get to a few remaining questions. There's a lot of remaining questions, so I'll try and go through these. And if there's any that we really didn't touch, then we can always follow up after. And then Hannah, I think, do you have a slide here with your contact information, or the best way for people to follow up?
I think I do. Yeah, there we go. Oh, look, there's YouTube.
Yeah.
Yeah, so you can definitely connect with me. Both of our emails are on there. We connect on LinkedIn or YouTube or email. Yes, we'll definitely do a good follow-up email to get everything out to you guys. And I'd say, yes, just kind of keep an eye for like these updates, because what happened last time is there was interim rule after interim rule after interim rule. I don't think they're going to do quite as much, because they knew that wasn't like, now we know a lot more. But we are going to get continued clarification on some things as questions keep coming up. FTE, I think that is kind of one of the biggest unknowns at this point. So there will be much more to learn, I'm sure.
Well, Hannah, thank you so much. This was incredibly informative and valuable. Everyone, thanks for attending, and thanks for your questions. I hope you found value as well. My email is on here. If it's specific to the PPP, and especially PPP2 and some of these new guidances, I would probably be going to Hannah. But you're more than welcome to contact me directly. But Hannah's definitely going to be your best resource here. Make sure to check out her YouTube channel. Additionally, you can subscribe to LevelSet's YouTube channel. We repost a lot of these and have a lot of resources on our website. Just general guidance of construction payment issues, and also things regarding the SBA and PPP. So if we can do anything additionally to help, don't hesitate to contact me. And Hannah, thanks again so much for taking the time.
Awesome. Yeah. Thanks so much for having me. Good luck, everybody.
Yep. Have a good day, everyone. Thank you.
Bye.